Good morning, everybody. Good afternoon. This is Trendy John from Simpler Trading. Let's go ahead and get started with this week's broad market analysis. If you would, just please take about 3 to 5 seconds, hit that like button. And now that you've done that, let's go ahead and start with this week's broad market analysis. So we're going to lead off here looking at this week's major U.S. economic reports and Fed speakers. Starting tomorrow, looking at Monday the 17th, we have 8:30 Empire State Federal Reserve Vice Chair. We have some people speaking, basically, is what it comes down to. Before I continue here, remember some of this is on delay, and they're still reporting that here at the bottom. It's saying maybe delayed due to the government shutdown from October the 1st to November 14th. NA not available due to government shutdown. Okay. So again, some of these reports are not coming out, but to get started with this week, we do have some Fed heads speaking. We had the Empire State Manufacturing Survey on the 17th. Coming in on the 18th, we have Import Price Index, Capacity Utilization, Home Builder Confidence, Business Inventories. Federal Reserve Governor Michael Barr speaks. Again, all of this information that I'm telling you that is on here is catalysts that could increase volatility in the market, but push prices to the levels I'm going to go over with you later on in this video. Wednesday, November the 19th, again, we have a survey coming out, housing starts, building permits, U.S. trade deficit, minutes of Fed from the FOMC meeting. So again, a little bit of volatility most likely into this day. And then on Friday Eve, coming in on Thursday, November the 20th, we have U.S. employment report, U.S. employment rate, hourly wages year over year, initial jobless claims, U.S. leading economic indicators, and then again, ending that day with Fed head speaking. Friday, November the 21st, we have Federal Reserve Governor Michael Barr with comments, Federal Reserve Vice Chair Philip Jefferson, Dallas Fed President Lori, S&P Flash Services PMI, and then consumer sentiment towards the end of that day. After that, I want to get into my next favorite thing, which is going to be this week's earnings calendar. And again, I get this information by using Earning Whispers out here on X. Great information. It's all right here for me. Some big names on here. So let's go ahead and start with Monday. Looking at the list, nothing really on here that I'm not excited about. You know, back in the day, I would probably take a look at Trip. I could look at that tomorrow afternoon. I do like trading into earnings, and if you guys want to hit me up and say, hey, John, I'm interested in what your levels are going into earnings. I love to trade debit spreads going into earnings. So if you do have a name on here that you're interested in, just let me know. On Tuesday, we have Home Depot, which I really am interested there. Baidu, and then moving down here, looking into Wednesday, I actually have a leap position on that I started for Target some weeks ago. I think the highest we got on this was about 30%. I believe we have close to 500 days left on this position. I'm not going to take it off because they have earnings. I'm just going to keep it on, and if it pulls back, it'll give me an opportunity to buy some more. Again, I like it over the next couple years. Then moving on down, we have Lowe's. Definitely interested in how they do this week. And then NVIDIA, big one coming in after the close on Wednesday. I will most likely play some sort of earnings trade into the report. And then we have Palo Alto. And then moving into Thursday, big name, Walmart. Moving down, I love Ross, so I love to cover and see Ross, and we may take a trade into Ross. And then on Friday, not much going on there that I'm interested in. Okay, so we're still lined up with some good names here. And this leads me now into the bigger picture, looking at the SPY QQQ. Now, again, as a reminder, I love to use this to kind of gauge my portfolio. So depending on the direction, like for example, we have 3 quarters up here. It's looking really strong. It hit our 2025 projection far as SPY is concerned. After we hit that projection, price has pulled back. The big note to take away from here, we've been above this cloud since 2011. This cloud is support until proven otherwise. This will remain that way. We do have some buy zones that are deeper inside of this cloud, just in case we were to come into here in 2026, 2027. This would most likely be a buying opportunity for me. And then for now, though, the big takeaway from this chart is the diversion between the 9 EMA. We're always week to week, we're looking at the diversion between this 9 EMA and then also the current price. So there is a bit of space between here. It doesn't mean we need to fill it right away. Doesn't mean it's going to happen this year, but I want you to keep your eyes on it. And if price comes back to there, I would be looking for some support. Let's go ahead and move on. What I would say from an indicator standpoint, this future yearly edge right here is really important to me. I like to see this act as support going forward. So if you're bullish, again, this level right here is important to me, and it happens to be 666. Be careful if we were to go underneath that. I would say short term, it would look like sideways to down. So that is a major level for me going into this week. Guys can see that we had a little bit of further movement to the upside after we closed on Friday. We were up a couple bucks. Again, 666 is going to be that over under, if you will, when looking at this chart. The next one I want to look at is going to be the weekly on SPY. In the room, I left the last three charts on here for you guys to see the advantage of understanding where your zones are and how the bigger time frame zones can really help, especially on a pullback. We were able to take profits by the dip, and we had a nice little run on Friday. One thing to take away from this particular chart on SPY, looking at the body here, this past week, we actually closed inside. And from a structural standpoint, I love that because we can easily trade the inside and up and inside and down, or anticipate, I shouldn't call it easy, but anticipate the inside and up and inside and down formations. Here, I'm going to do it a little bit different though, since the 618, the bearish 618, is above that inside and up. I'm using this as more or less my over under, if you will, to the upside. So if bulls can reclaim this level, then I feel a lot better about the move that could continue back up to the monthly edge, which comes in around 685.5 or so. Okay. Now to the downside, the inside and down would usually be right underneath the body. But if you look closely, we have this purple dotted line there. This is a trendy monthly mid. So I'm extending basically these levels to anticipate inside and up or inside and down, inside and up when we go above here, inside and down when we go below here. For bigger portfolio, well, I shouldn't say bigger portfolios, for bigger picture, this is really what I would consider a neutral level. We can definitely trade in this gray zone. It's more like intraday trading, but the follow through on the possible bigger move happens, in my opinion, over the top of this level or below the level as I just explained. Let's go ahead now and move on into the QQQ. Same thing, we're going to look at the bigger picture. So let's go ahead and type in that. All right, and over here, after hitting the 2025 projection, we're able to hit all three targets within the zone. We did pull back, and you'll notice that we're holding the 594 level. As long as we're holding that, that is going to be my support for right now, and our resistance is going to be any line that's above price, and that happens to be 618. So if we were to just round this out, so again, 618 is resistance, and then 594, I'm going to use that as support. You can combine that 594 to 581. I would expect buyers to come in if we were to pull back into that area. Just like the quarterly on the SPY, notice where price is, notice where the 9 EMA is, and there's quite a separation into there. And if we continue to, this trajectory to the upside, especially into 2026, it could be a bit challenging because we'll be starting the year extended from a technical perspective of using the 9 EMA and prices. I've been saying this, and I'm open-minded to the idea of the market pulling back very quickly to kind of reset, if you will, to give us a better look into 2026. This could start off a lot like 2025 did, where it was a little uncomfortable. You're bullish, but you also feel like you can't really press the gas as much as you want to. I just would prefer a reset. So the way that I'm trading this right now, going into when we started the challenge on 31 October, is I'm just trading a bit smaller, being a little bit looser, if you will. So wider stops, smaller positions, or smaller positions, no stops, and allowing my technical analysis to play out. And that's really helping me. I started to buy the dip a couple days ago on things like Google, Amazon, We were able to add into Palantir and then trim that on Friday as well. We literally like bought or added more right at the bottom, and then they had a huge move to the upside. So that was nice to kind of get back some of those profits that were unrealized the day before on Thursday. Overall, it was a great dip buying opportunity that came into full swing on Friday, but is it going to last? I mean, really, that's the big question. I'm going to show you a little bit later on the future charts when we look at ES and the NASDAQ on the 4 hour, whether or not the big question for this week, whether or not this week is going to be an ACDC bull setup, or are we just creating an H formation on the smaller time frames? And again, I'll show you that, guys, just here a little bit later towards the end of this video. All right, let's go ahead and get into the weekly chart here on the Qs. And you'll notice here it's a bit different than the SPY. And being such a fan of the inside and up and inside and down formation, it kind of sneaks when we come in here and we have a candle like this that closed underneath the body. So in Trendy Methodology, this is not considered an inside candle. There may be methodologies out there because price did close within the wick. They call it an inside, not here. Okay, so don't get those confused. What this is called is a continuation candle. So we actually closed lower on the week, and therefore this is pretty bearish, if you will. You can see that on the weekly. Not saying that it stays this way. I'm saying what happened on Friday. Okay, now again on Friday, same thing here. We went from 608. Notice that prices actually went up a good $3 to the upside. That could have been in relationship with maybe Google. Google, I don't know if you guys noticed, but Warren Buffett took a stake in Google, and prices went up, I think, almost $10 or $11 after market on Friday. So really big swing there on Google. At this moment, Sunday night, I'm very happy that we've been adding into that position. So very, very good for us. But again, a lot of things can change before we actually open up on Monday morning. Getting back to the QQQ chart, though, we did make a lower low and we've made lower highs. So this, again, leads to a bearish trend here. The big thing for bulls, we need to see prices get up above 618 or around that 622 level. And we still are in the bear channel as long as we're below 612.35. So again, we did have a little bit of a gap up there towards Friday's close, but we need to see prices above 612. Once we get above 612, then we still have some room that we need to get through. We have a lot of work, I should say. We got to get through the bearish golden profit level, that's 616 by 622. Big picture, bulls are back in charge above 622. I like to see 3 days above here before I feel confident that we will lead towards this level up here at around 631. If we were to dip back down into the zone here, this zone is support until proven otherwise. What that means from a weekly perspective is that I need to see a weekly candle close underneath this zone in order for this zone to not be validated anymore. Okay? All right, moving on. Let's go into this next chart, which is going to be the dollar chart. All right, so looking at the weekly, the big difference here is that we had it inside and down. And as I said last week, I was looking at it. I couldn't get bullish or bearish on the market. I felt neutral, and that really helped me out. And the reason why is because the dollar is really in a neutral position, even though it's going inside and down, which, again, I would say led to the rally on Friday, but it was supported, and we talked about this last Friday, right here at this inside and up. So guess what? It starts to bounce. So we're really locked in here on the dollar, and I'm going to leave you at this. My key levels are 98.2. If we break down below there, we could see the market continue to scream higher, and 99.86. If we start to get above there, I'd say be very cautious as the dollar could move up towards the 101 to 102 levels. Okay. Again, just a holding period, which to me kind of translates to a possible choppiness. And after looking at the SPY and Qs, you can see that the market's basically neutral, if you will. Okay. Moving on, let's go ahead and take a look at the 10-year Treasury. So if we bring this in right here, not much has changed. There's not much to report on this. Again, we are stuck between two opposing zones. My major levels here are 3.8 and 5.005. As long as we stay in between those levels, it's just all noise for me. Okay. Again, if you guys wouldn't mind, just take a few seconds to hit that like button. I love to see like everyone that watches this video. If you're watching it, then you're using it for information that helps you. And I would really value the fact that you just hit the like button and say, hey, John, thank you for providing this to us on this beautiful Sunday. Okay. Moving on down, we have the skew, which I absolutely love. And you guys know this is a really big part of my overall analysis. And honestly, I wouldn't be able to do it without all these charts that I'm showing you. One thing that I am noticing is that we're finally getting a move lower. I can't help but to think that, you know, the skew is attracted possibly into the trendy edge here or the risk on level. And what that means is that the market would actually possibly into this week actually give us even more fear. So is it a, again, H formation, and we're going to look at that here in a few minutes, or is this just, hey, I'm going to scare everybody, I'm almost there, and then I'm just going to pop back up? Basically, what happens here, if you were to take the SPY in the background, is that as prices get down here in the extreme fear area for the skew, I actually start to think risk on. Now, again, the risk on level here has actually worked every time looking for 5+ days out on SPY and it being profitable. Now, I'm not saying it's going to work this time. I'm just looking at the data that every time we've come back here since 2023 timeframe, the market has actually pushed back to the upside. What I noticed going into several months back and teaching you guys is that we weren't getting consistent, you know, 2+ weeks underneath here. And I thought, hey, if 2 weeks had closed and it finally happened here back in April, that, you know, things could get even uglier. And they did, you know, they pushed down here and they were definitely getting ugly. They were almost getting down to the extreme, to me, extreme fear. Because look, the fear and greed indicator might say extreme fear, but if you've been around extreme fear, you know, this has not been extreme fear in my opinion. Okay. But look, we're getting lower here and it's starting to say, hey, we could be getting into an area where we could bounce nicely in the market. I would have to say that bounce was actually on Friday, but just know if we get down here, my plan for me, myself, and this is not financial advice for me, is to get long at least 5 days out or so on the SPYs. Okay. If we get down into here, I was wrong, and then I'll start building a bigger position for later on into the year. Okay. Moving on. The next thing we're going to be looking at is, yep, the fear and greed index. So let's go ahead and pull it up here. You're going to notice that it's at 22, which says extreme fear. The majority of traders are on the put side, or perhaps might have bought puts on Thursday, got really excited about that open, and then all of a sudden we ended up ripping. You know, I'm not saying that your day's over. If you're bearish, there's still, again, there is still hope for you guys as well. And I'm going to look at those charts here in a few minutes. But basically, everyone's on the put side. People are kind of scared. And that's what that is saying here. Okay. Next thing that I want to be looking at with everyone here is going to be the ES futures. We're going to walk it down from a weekly into the 4-hour. This will be really quick, and then we're going to finish with the Bitcoin futures. So ES on the weekly, as you would expect, looks a lot like what we saw on the SPY. We had an inside candle, the inside and down goes inside and down under 67.65. Okay, inside and up happens above 67.87. But just like I saw on the SPYs, you know, even though we go inside and up, we are going to run into that bearish golden profit level. I'm not saying I won't try to go long above here. I'm just saying these are resistance till proven otherwise. So this level here, 68.40, if bulls can get back above there, same thing with the SPY as the ES futures, like to see some kind of base at least 3 days above that before I really believe the hype. To the downside, the 618 that I had measured from the last 3 weeks, 1, 2, 3, this was that level here, basically saying that this uptrend that happened, if prices are below here, that uptrend is broken. We actually did something good. We closed above that. We had some wicks down here. We made a higher low here and we have lower highs here, which means that we have a sideways trend, which leads me to believe that our overall sentiment using our banners, because they're mixed, this is a neutral strategy going into this week. Please be flexible, use your levels, be patient. The next thing that we want to be looking at here is going to be the daily. When I look at the daily, I have triggers on here. You're more than welcome to go ahead and pause this. Last week's triggers worked perfectly. The short trigger was a great short trigger. The buy trigger was a perfect buy trigger, and we were able to capitalize off of that move. Now, they have moved this week. These are not the same numbers. So again, please pause this, throw it on your charts, and let me know how they work for you. Basically, what I'm doing here is on the short trigger, I'm using the upper weekly edge, and down here on the buy trigger, I'm using the lower weekly edge this week. And if that doesn't work, my next buy trigger is around 6,600. These triggers are not blind triggers. I like to look at a smaller time frame, assess, and then decide whether or not I'm going to take the trade. Let's now go into the 4 hour. I've been talking about the 4 hour, and really this is the theme for me for this entire week. And I'll probably title this video based off of this. Are we indeed going to an ACDC setup? ACDC equals ME, and that's what this whole setup means. This is a setup that was coined here in the Trendy Room years ago. And basically what it means is that once we go above the this arrows here, we look to go long, we have resistance at these arrows, and then we end up moving to this purple line, which is the ME, the monthly edge. ACDC equals ME. So is it going to be this? Are we going to see this? Or is this an H formation? And so basically what happens is you run up into resistance, you get a little hope, and that's what the H stands for me, a little bit of hopium, and you hope that prices go back up, but they continue back to the downside. So again, that's what I'm looking at here. Your upper weekly edge is around 68.75. Your lower weekly edge is around 66.96. What I noticed coming into this week, the weekly edges are so close to last week's. What I would do is combine the lower end of last week's lower weekly edge to this top weekly edge, and this will give you a buy zone, and then take this upper weekly edge, use last week's up here in that monthly edge, and that's going to give you a sell zone. So these are our two opposing zones for this week. This is the range that I'm looking for. It doesn't mean we won't break above or below, but again, is exactly what I taught you on last Thursday for happy hour. Buy zone, sell zone. Let's go ahead and move forward. The next thing I'm going to be looking at is the NASDAQ futures. And again, we're going to go from the top-down approach. The NASDAQ, looking at the weekly here, the first thing I want to talk about are the banners. So this week, our overall sentiment is neutral because we are green, yellow, and red. But one thing I do want to point out is this is red for the weekly. Now, this did not take into consideration the gap up that we had after hours. So this could change. You know, we could end up coming in here and it just being neutral. I think overall we're neutral. That's just the way that I want to play it going into this week, okay? All right, so just like the QQQ, this is not an inside week. This was a continuation week down. We closed lower than a week before. We have lower highs and we have lower lows, which is a downtrend. We stalled right at the 618. This is a big deal. So measuring from the last 3 weeks, which was a really nice rally, from swing high to swing low to swing high, we've stopped right at the 618. Bears, you really need to be below this level, but just understand that this big green zone, and it is big, is a big support zone. What I would do is break this zone into quadrants, and that's what I've done for you. Each one of these could be an area where bulls could buy back in the buy zone. So be careful if you're short. Just know that each one of these levels could act as support. It's not until really we close underneath this zone that I'd be like, wow, okay, on to the next zone, okay? So this zone is support till proven otherwise. Basically, Friday would have to close underneath here. If we get the move up, you're above the bearish channel if you can get above 25,305. That's the first thing that bulls need. The second thing is, once again, we need 3 days above the 618 in order for me to feel like this rally could continue to the upside. Over here on the NASDAQ, Again, we have our levels. I'm using the buy trigger down here at the lower weekly edge. This area here for resistance is based on fibs and some structure. And then the sell or short trigger, sorry, is your upper weekly edge as well. These are the triggers for this week. And once again, I would use the lower time frames to assess whether or not I want to take that trade. Onto the 4 hour, same exact thing that I was just talking about. I really feel like we should concentrate on the H formation this week. Is this hopium, or is this indeed a chance for the ACDC to take its course and lead prices all the way up to the monthly edge? Now, where is that monthly edge? It's way up here. So that's saying 26,001. I mean, that's a 1,000 point move. Do I think it's going to happen this week? The ATR is around 908. Not unless we get a huge gap up and we continue off of that, then maybe we beat that ATR. I just don't think it happens this week, but if it does, what a great surprise for bulls. I would just leave it at, hey, is this a setup for ACDC, or are we indeed just popping up into resistance to come right back down here? Like the ES futures, let's go ahead and look at the lower weekly edge and the upper weekly edge, a little bit different than the SPY or the ES, because we actually made lower, or we closed lower this past week. So our lower weekly edge is lower in this case. So I don't have another zone to place this on. So I would use this as your support. This is your resistance going into this week on the 4 hour. I'd like to end this with Bitcoin. We're going to go ahead and take a look at the bigger picture. So that means I'm going to look at the quarterly. And guess what? Looking at this range that I have been measuring for the last couple weeks, is I'm using the last 3 quarters, okay? And I went from the low to the high. We stopped right at the 618, huge level for those 3 quarters. Basically, those 3 quarters of bullishness are now bearish if prices remain under 94,875, okay? Big picture, why there's so many levels on here. Let me go ahead and take this off. Big picture is if we go down to the low, to the swing high, we're just underneath the 23.6. When combining both of these sets of coefficients, basically what I would love to see for Bitcoin is a move back above 101,000. That means we get back above this area here, but we're also back in the extreme bullish channel of the entire move. So there still is some hope here for Bitcoin, and there's a lot of talk for it going down into 80. We actually have that same level here. So if we combine this inside and up formation, it comes in at around 82 and some change, but prices could actually move all the way to 64. Okay, so let's take that off, make it a little bit cleaner. We also have a 9 EMA that's around 80, so a lot of confluence down there. This is kind of like, when I look at this, I think about the SPY and the Qs, or the ES and the NASDAQ on the quarterlies. This is the same thing that was going on. It was extended, and now it's coming back into that 9 EMA, or at least close to that 9 EMA, which makes me feel better about the chart itself going into 2026. That was my broad market analysis. I hope it helped you. If you have any questions, please reach out to me. Have an amazing day. Melissa and I will see you 90 minutes before the market opens tomorrow to get you guys prepared for the week. We'll see you tomorrow morning. Have an amazing day.